Welcome everyone, and thank you for joining us from around the country for this week's Pro Perspective, the insider's look at all things commercial real estate. I'm your host today, Yannis Papadakis. I'm a business development manager at Crexi's auction department, and today we are thrilled to be featuring a very special guest, Brandon Hanna, to talk about all things regarding the pharmacy and drugstore net lease market. Brandon Hanna is a founding member and managing partner of Encore Real Estate Investment Services. Alongside his partners, Brandon has overseen a team of seasoned investment professionals that focus on advising clients in the acquisition and disposition of net leased and multi-tenant retail assets throughout the United States. Throughout his over 12-year career in investment brokerage, Brandon has been really breaking records on a price per square foot basis, cap rate records in nearly every market that he's worked in. Brandon has proven himself a leading advisor and strategist with clients, including some of the most prominent developers, institutions, and private investors in the industry. Brandon has completed over 400 transactions in 40 states valued at over $2 billion and has successfully completed over 80 loan assumptions. Prior to founding Encore Real Estate Investment Services, Brandon began his career at Marcus & Millichap. I was a Marcus guy too, where he was able to exceed the multi-billion-dollar level of total sales by age 29. Talk about an overachiever. This, combined with his experience working in the private sector, has really sustained his reputation as one of the most honorable brokers and consultants in the national marketplace. Brandon, welcome to the show.
Thank you. Happy to be here. Thanks for the kind words and the introduction.
Absolutely. Now, as a quick logistics reminder for our viewers, there is a chat feature. If you ask questions, we will try to answer them from time to time throughout the show. And with that, let's get into the conversation. I thought we would start, Brandon, with a little bit of your background. How did you first get into commercial real estate, and how did you eventually come to specialize in pharmacy, drugstore, net lease assets?
So from the onset, we, when I say we, my background, my upbringing is, my grandparents were immigrants from the Middle East, and they immigrated to the United States in the early 70s. And they had that entrepreneurial mindset, being farmers and then merchants by trade. They immediately, you sought to use their skill set and apply it into the retail market because they understood the value of, good locations and understood the value of high performing locations, which would, generate high traffic so that they could sell a lot of goods. And just growing up in southeastern Michigan, I was a part of that trend of going on site tours and just understanding the underlying intrinsics of retail from the inside, understanding the components of operations and how the rent to sales ratios play a factor, underlying location, intrinsics, and just basic fundamentals that are somewhat overlooked in our industry because of a lot of the red tape. But yeah, I've been really, and I say this, and a lot of people, wonder how could you, work since you were 11 years old? Well, it's when your grandparents lived right next door to you, pretty much until you were 19 years old. It's a blessing in disguise because they're pretty wise souls, and they attributed to a lot of my success because they wanted to instill that, different form of education, more of like I call it like the school of life, and, right. Set my expectations, accordingly to what I should understand, probably before my years, hence, my passion for this specific industry.
Yeah. And, it's interesting too, because I have a similar origin story. From the age of 12, I was working in my family's liquor stores. We owned liquor stores throughout Southern California and retail shopping centers. So at 12, my dad would say, hey, on a Saturday morning, throw on your shoes, grab your apron, you're going to go work in the liquor store. And he did that because he wanted me to have an appreciation of, hard work from a young age. But also he would tell me, if you don't want to work in the liquor store for the rest of your life, you got to do well in school, because you're going to keep going in there until either you do well in school or you find something better. So I think that's kind of an old school mentality of, even if you're a kid, you learn how to work. And I really did give me an appreciation for, hard work at a young age. So that's interesting. What were some of your first tasks starting at 11, working on the properties? What were you doing?
I remember that my grandfather, God rest his soul, would give me, simple tasks such as counting how many cars would, be at the intersection or cross the intersection in like an hour's time. And I always would lose count after like 20, and I'd make up a number. But he always seemed to have a pretty good gauge of what it was. But yeah, it was simple stuff like that. And I mean, I remember he'd just say, you're going to have to sit there and count the cars. And it was like something so simple was so important to them. But now we see why, traffic counts at intersections are so, much, sought after. And that question is so important to a lot of investors.
I'm so jealous. You were getting some actual good commercial real estate fundamental lessons as a kid. I was scraping gum off the sidewalk in front of the liquor store.
Yeah, I did that too. Yeah, scrape gum, take out the trash, count the bottles before the bottle machines were, introduced to the market. You name it. It was like, and the saddest part was I was upset because I wasn't really getting paid for it at the time, right? I was, given like a ham sandwich, but, or else I felt like I was at the time. But you know what? It definitely proved to be priceless, as they say.
Absolutely. Now, moving a little bit forward in your career, can you talk a little bit more about specializing over the course of your brokerage career and what that looked like? How did you get into focusing on retail, and then specifically on pharmacy and drugstores?
So we had, just because of the family background, in how we were all pretty much heavily invested, similar to your story, into the retail sector. Following my experiences, I was introduced the option of working at a brokerage firm, which operated, strictly in investment sales, and they operated on a national platform. And I was reluctant to take that opportunity. So I said, I'll, see if I could, test the waters in different industries. But investments really piqued my interest after just seeing, the differences in leasing and tenant representation. And so I wanted to deal more with like the private owners, and felt that I could test the waters. And I joined Marcus & Millichap, and, just partnered up with, just given the regional manager, partnered up with one of the guys in the retail sector. And we essentially had a business model to, spearhead single tenant retail assets. And I just, again, understood drugstores pretty well. Not so well at that time as I had expected, but just the basic fundamentals. And, just a world of learning, came into play following the real-time conversations and experiences that took place with the individual owners. And there was a lot of underlying experiences that, I'll keep with me forever, such as meeting, the former general counsel who was, vice president to one of the major drugstore corporations, just from a call. And, now he's a very close, friend of mine, and getting perspective from the old school legends in the drugstore sector, how they viewed the drugstore space. And we're talking, 15 years ago. So just built a very strong underlying client list of drugstore owners, in conjunction with other single tenant owners, but primarily drugstores, which was my focus from the onset. And that being said, it ultimately, one thing led to another. Proposals led to listings, and listings led to meeting new, buyers in the market and learning about every specific state, because we were very active and we were taking a lot of listings, early on. So it was exciting. It was just, learning as we go. And I think that's the way it works for everyone, right? You have all of the experiences that you take with you, if you're passionate about it. And people always joke and say I have a memory like an elephant, which I sometimes test my own memory, but it's amazing to remember my first deal and, what I learned in that deal, and how I attribute my advisory, today. It's really, things haven't changed because I've stuck to the basic fundamentals. But that being said, we'll touch on those fundamentals throughout this call.
And, as we're, on that topic, could you explain the fundamentals of the pharmacy net lease market for those who don't know? Location, front end versus back end, sales reported, how that breaks down. What are the fundamentals that you look at?
So just overall, fundamentals as it relates to, my perspective, everybody has a checklist. Underwriters have a checklist. Institutions have a checklist, REITs, single tenant, boutique outfits. My checklist is, my own basic fundamental checklist. It's the reason why I was always intrigued by drugstores was because of their, they always primarily picked the best location in town. It was going to be a hard corner, signalized intersection, main on main, with very well, fluid points of ingress and egress, prototypical store footprint with a drive-through that was very well lit, on a high traffic corner with an acre and a half lot size. Generally they were like 1.25 to up to 2.5, 3 acres. I've seen them, but they had enough parking to where if the deal in and of itself wouldn't pan out because of those underlying components, those fundamentals, you had the ability to not get hit by a meteorite, as I would say, because you had the ability to reposition that asset down the line. So there was, you had maneuverability in the form of, upside potential, as opposed to like mid-block locations, with respect to other retailers that are okay with mid-block locations. And not that there's anything wrong with mid-block locations. We, those have other selling points too, but, granted, we're specifically focusing on drugstores today. So just, hard corner, main on main, prototypical store footprint. They had the drive-through. We all see the viability of drive-throughs now. I mean, unfortunately, in the new world of, of this pandemic and COVID, drive-throughs have come into play. They're very critical component to the survival of a lot of these drugstores. And we've seen that, it's proven. A lot of the mom and pop, pharmacy operators who have pharmacy locations that do not have drive-throughs, I've spoken to a lot of them. They've reached out to me, and they say they're struggling, unfortunately, right now. So that being said, the drive-through was a big component on my checklist. And I always like deals that have rents that are in line with what the market can bear. Some may view them as higher than what they're comfortable with, but it's all case by case. I mean, I've seen rents as high as $1 million, and you're talking about a property that's in Queens, New York, one of the most diverse areas in the world, they called it in 2019. But, highly dense demographic with, population counts that are, unimaginable for what it's worth. And then you've got lower rent deals that are in tertiary markets. But just breaking down, every deal case by case, I would always incorporate that, underlying fundamental, components into each deal, and then take a deep dive into them and understand, where that deal ranks in terms of, my spidey senses, right? My understanding of where they should be. And if they checked out, I was comfortable, selling them to clients that were, in the market.
And granted, things have changed a lot in the last year, regardless of the product type. Everybody's been affected, in the last, 3-4 months alone. But drugstores have seen a pretty big shift just in the last year. And COVID has really kind of put drugstores back in the spotlight, being an essential business. They're operating. Let's widen that a little bit. And can you tell me, where are pharmacies today compared to 10 years ago? And let's not even broach the COVID aspect of it yet. Let's talk about that in a more micro thing. But just, generally 10 years ago, drugstores versus drugstores today, what has changed? What are you seeing? What kind of trends have changed?
So it's a great question. That topic, I get asked that question a lot. 10 years ago, the overall, I call them the drugstore wars. They were still, in the process of, we had just come off one of the greatest downturns in our lifetimes at that time. Let's hope we don't have to go through another one. It sure, unfortunately, looks that way. But, that being said, 10 years ago, 2010, we were coming off of a period of time whereby there was some more runway created, in the form of the quantitative easing. And that introduced the, competition of the dollar stores to come in. And the dollar stores coming into play, although the drugstores were still working to, survive in the form of, just that consumer pinch, and trying to survive that consumer pinch that took place. They were strategizing on what stores to, keep open, what stores to reduce rents on. But that being said, the introduction of dollar stores, it didn't help that, that whole model. But the drugstore retailers, I want to say, they're very advanced. They see, I always use this expression, they have like a telescope that sees through the future. And they have that in the form of, they expected the dollar stores to expand, but, you never have the whole picture, right? They didn't realize there was going to be, such a movement, because there was thousands of Dollar Generals and Family Dollars and Dollar Trees were introduced into markets where there was already a dollar store, and that impacted the front end sales of a lot of the, drugstore retailers. They enjoyed the profitability because those margins were viable. And if you walk through a drugstore, you see the way that the drugstore is overall, the way they have it set up, and the merchandising. These are merchandising experts, because they have the customer walk through all of the necessity items to get to the back of the store, which is where the pharmacy is located. And they're capturing that movement of, hey, let's pick up a toothbrush, or let's pick up a soap for the shower, or diapers for our, baby, or thermometers. And these are all, items that are higher profit. Granted, their model as it relates to quality of products is going to be tiered, higher than what the dollar stores are going to sell. That front end still, because of that consumer pinch, felt a decline in sales. And so they worked tirelessly to, introduce new models into the pharmacy, as it relates to keeping the customer in the store longer, meeting rooms with the pharmacist. And I saw CVS incorporate the Minute Clinics, and then Rite Aid went in on their wellness remodel program. And then CVS had Walgreens had a different program where they had, operated on a more of a consolidated approach of, items that were not moving to, just be more strategically targeting the items that were going to have a quicker shelf life. And that being said, the drugstores, they had a sentiment in the marketplace that flailed, and it was a sentiment that I even saw myself firsthand, where dollar stores were essentially, that they were more of the top pick. They had the longer term lease. They were the brand new, prototypical footprints. They had the 15-year triple nets, and that being said, I'm sorry.
With increases.
Right, with increases, and drugstores are generally flat because they're going to pay the top dollar up front, which is what I explained to most, because they're securing their position in one of the best corners in town. And that being said, we had gone through a period of time where lenders were underwriting these properties aggressively, and that being said, you saw sales declining from the front end. And that movement, ultimately you saw, I call it pivoting with a parachute, right? And then CVS pivoted with a parachute. They immediately changed to stop selling cigarettes, and they moved to from CVS, they became CVS Caremark, and then they became CVS Health. And now we see that movement where CVS acquired Aetna, and they see the future because they saw this movement, they saw the front end stores getting sales getting impacted, and they said to themselves, we need to, instead of being a one-stop shop that was more like they call them in New York City, I believe, bodegas, right? They, where you can come in and buy all your necessity items. They wanted to offer the health experience. And, you saw Rite Aid do it initially with the wellness, concept. And I know Walgreens is in talks with Humana to, sort of mimic what CVS has done with Aetna. But just overall, the underlying sentiment had shifted. And for some time, although there were still buyers who were targeting the drugstores, there's always been a movement towards drugstores because it's more of like a flight to quality. If you owned a Walgreens or you owned a Rite Aid, you owned a CVS, they were as, considered as strong as like, owning like a government bond, at certain points in time, but, coupled with good intrinsics. But that being said, the movement slowed, and you see these upticks and downturns in the economy, and look where we are today. Like you mentioned, the drugstore has given the essential, been given the essential tag, right? And that essential is more of a survival component in the marketplace today, because during the COVID crisis, I just look at it and I understand that you've had, the threat during that 10-year mark of Amazon, who aggressively expanded, and Amazon came in and acquired PillPack and introduced PillPack to the marketplace. So that was another threat to the drugstores.
Remember years ago, when I was a broker at Marcus, PillPack and Amazon coming together, and then all of a sudden, a bunch of drugstores came onto the market in like the same 2-month period. It's like the market was really reacting to Amazon's entry into the space.
Right. Yeah. It's like owning a stock, right? I'm not big in the stock market. I believe those guys have cameras on you, like when you walk into a casino, but I'm just a real estate guy, and there's going to be investors that are going to react to market, shifts. There's going to be investors that are going to react to, corporations that introduce new avenues where they could offer consumers a more convenient approach to acquiring their prescriptions. And I understand that model, very well as it relates to the introduction and the convenience factor. But I'm a, old school advocate of saying to myself, people are just not going to stay at home and just mope around. I can guarantee you I'll get a lot of people behind me right now who are on this call who would say that, that in and of itself is correct, because most of us stayed home during Corona. And when we went to the drugstore or the grocery store, we're like, I remember FaceTiming my wife and saying, I can't believe I'm so happy walking into, this CVS or this Rite Aid, because it's like I feel like a kid again, and it's an escape. So that being said, I think it reaffirms my theory that drugstores, they've been in and around these communities for 20 plus years, 30 years, 50 years for what it's worth. And they're, for the most part, destination point locations for these underlying communities. They support a major cause. And I am, supportive of how they're pivoting. Yeah. And I think that we see this day in and day out, and we react to market news day in and day out, but we should continue to keep focused to, underlying fundamentals. And if, those fundamentals are strong, the deal will hold, in terms of value and sentiment.
We've got a couple of questions that have come in. First of which from T. Vacarinos. He says, hello, what percentage of pharmacies have gone dark in the last 2 years? And what are the features of the dark pharmacy?
The percentage of pharmacies that have gone dark, I don't have the exact number, but I can tell you that the certain points in time, call it 2008, when we went through the economic downturn, I know there was a movement of stores that were being shuttered. I mean, Starbucks shut 500 locations down for what it's worth, right? Again, because of the consumer pinch. Rite Aid shut a couple hundred stores down. Walgreens shut 300-400 stores. CVS was shuttering stores. But just overall, these stores maintain a very strong presence with their underlying store count. Granted, Rite Aid has cut their store count in half because of the major acquisition by Walgreens, but because of certain economic movements, the time period where I could remember where there was a major movement of and concern of store closures was following that Great Recession of the 21st century, where Rite Aid and Walgreens and CVS were shuttering stores. And as long as I could remember, I'd say, they average shutting stores every year, but it's just like, when McDonald's announces they're shutting down 250 stores or 500 stores, these are companies that have 15, 20,000 locations. So it's, they're actually, it's normal in the sense of, certain models, such as, CVS going into Target, and they've gone into Target stores, and if that model proves to be viable or it doesn't, and they close down, 20 locations, not that they have mentioned anything to that effect, but I see that as, companies continuing to stay ahead of the movement. And as it relates to the last aggressive movement of store closures, it was when Walgreens took over Rite Aid. And that was expected because Walgreens took over a lot of the Southeast stores, the old Eckerd prototype footprints, and those stores were across the street from a lot of the existing Walgreens that were originally built to suit for Walgreens Corporation. And, that was a part of that model in expectation of that acquisition. So there was, over, call it 500 stores that were announced that would get closed. And I think that gives a negative sentiment to the marketplace because it's not explained properly. You see, when two major conglomerates are, coming together as part of a major acquisition, a lot of times people don't even realize that they can go on their website and view their 8K filings and view their business model strategies, because it's all public information. And
right.
You can view that information and get a better understanding as to which territories and then, why they're going to be closing down certain stores in those specific markets because of the, overlap. But I feel like it, gave a negative sentiment to CVS, because obviously CVS was coming out and saying, hey, we're closing down, 25 or 30 stores. But that's because CVS has over, 10,000 locations, and certain stores have been there for 40 years and they're building a new store up the street where they have a the ability to incorporate a drive-through. So
Right.
it'll be a relocation. But again, that sentiment needs to be explained. And I think people make assumptions a little too early, and it becomes like a trend and a domino effect to an industry that shouldn't have such a negative sentiment. But we're thriving now. I'll tell you, this has been epic in terms of the drugstore comeback, and I am honored to be a part of this rally. I really am, because I know this space so well, and I'm a big believer in, like I said, you watch the traffic counts and you watch the companies finally getting to where they're recognized, and they were a part of this this movement. They were at the White House, all three of them.
Mm-hmm.
They were there for a reason, and it's the reason is because of their their drive-throughs, their importance to how viable they are to these communities.
Right. And, we've gotten a couple of questions all along the same vein. We've got Victor that says, I'm a pharmacy owner in Texas. What is the risk of the tenant leaving after the lease term ends, especially if it's single tenant? What is the criteria to land a good deal, such as lease term left, cap rate? We've got another question, what percentage of drugstores leave when the option period comes? How many of them are renegotiated down, and by what percentage? Also from Joe Barnaby, if you own one of the stores that gets shut down, are you screwed? What is your feeling sentiment-wise on, when you get close to the end of the lease term, is there any way for an owner to know or understand, hey, I may have some downside risk here at the end of the initial term? What do you look for? How do you evaluate that? And then what do you do if, you've got one of the locations that goes dark?
So, all great questions. A lot to absorb. I get asked these questions on a daily basis. For the first question, the overall, sentiment as to how these drugstore retailers are going to underwrite a specific location. They have a formula on their end. They have a model, but I'm sorry. So their model, their formula is very much, it's basic. It'll go above that in, one sense of market connection with our leading competitor, because a lot of times that's not so much a bad thing. I value competition. I look at competition as a major traffic generator and an opportunity to scale motivation and persistence by any one major retailer to get aggressive in terms of offering discounts or offering other components to where you can draw a customer in. So that being said, I look at competition as a good thing, but overall, the underlying performance of these specific units, it's as simple as really going into the drugstore, which I like to do. I walk in and, it's case by case. Sometimes you'll see the store very well stocked. You'll see the traffic flow. And, that's how I gauge, viability if there's not going to be store sales reporting. Although on a lot of the Walgreens, there are, sales reports, but they're only going to reflect a fraction of gross revenue. Some of the older CVS will still report sales, but they're trying their best to remove those now that they're extending leases. And
Right.
A lot of the Rite Aids report sales, but it's, also the same concept like Walgreens. They're just going to report a fraction of gross revenue because they're major corporations. They want to keep this information as confidential as possible. They don't want anybody getting their hands on sales reports and script counts where somebody's going to say, hey, these guys are doing 6,000 scripts a week.
Yeah.
Let's enter that market. Let's go compete with them. Information is power, and they want to limit that information. So I think it's as it relates to how you determine whether or not they're going to renew their lease. This is the reality. Their renewal ratings are in the high 90 percentile. If you look at, their operations, Rite Aid, CVS, Walgreens, they have stores dating back to, the 80s, the 90s, but their aggressive movement in the 90s, in the early 90s, where they were, switching their prototypical footprint to that 11,000 square foot model. This is Rite Aid, that is. A lot of those stores had 20-year initial leases. That was their initial, basic component to their lease structures. It was a 20-year with, 6 5-year options. Walgreens was a 25-year with, 10 5-year options or 51-year, and CVS would do a 20-year with options or a 25-year. But, that being said, those option periods generally had increases because the initial term was flat. So you see a lot of these negotiations happening now, Yanni, and this is we're in 2020. So the stores that were built in 98 or 2000, those leases are maturing. So you see a market today that's thriving because of the underlying activity in the marketplace, because not only do the landlords look at this as a scenario whereby, there is concern on certain, from certain ownership perspective, and it depends on the ownership. If it's a private ownership, if it's an institutional ownership, it's all going to determine, in my opinion, the amount of experience that these owners are going to have and leverage as they're making contact with these retailers. Because if you call somebody and you have, you're leasing 3 cars from the same dealership, you're going to, in my opinion, you're going to be able to, you're more comfortable. They know you, they know your trailing history. If you're calling somebody and you have, you've 1 car from, one dealership, it's a little different. I feel like you have to go through the course of the experience. So if there is a one-off drugstore owner, really in a nutshell, call an experienced, drugstore professional to walk you through that concept of an extension. We're, here to help. That's what we do. But 9 out of 10 times, I feel like these owners, they have an expectation because they hear from the market that, they're just going to shut their doors and leave. It's not always the case. There's a lot of boxes that need to get checked from the, from the top leaders in, in the corporation to just shut a store down. But, that said, you have a lot of components that are, viable to the corporations to keep the stores open. I think, as it relates to these corporations, they'd rather keep stores open than close them, realistically, because they've been around for so long. And now with the Corona, the wake-up call is what I call it. They've come back to being, a top necessity in the marketplace. And I think that reaffirms their position for, the future. And you're seeing this. It's not just information that is coming from me. You don't have to take my advice on it. Look at CVS. There's a lot of new 20-year leases, and I'm sure there's a lot of people on this call who are great brokers who can share the same sentiment. There's been a lot of lease extensions. Yeah, granted, there was rent reductions, but it's a two-way street, right? We all have to work together collectively to to ensure that something good comes to fruition. And I think that benefits the drugstore outfits, and it benefits the, the owners, because they're lowering their basis without question. But that lower basis helps because the cost of everything is increased, right? So the profitability, the margins have shrunk. So we're essentially conforming to what has taken place, over the course of the last 20 years, and we're correcting it. And that correction, I think, again, reaffirms that these retailers will thrive in the future. But again, the sentiment, because Walgreens has come around and, call it, they put a horse's head into every bed, asking for rent reductions. It's not so much a bad thing for Walgreens, although it might be bad for certain landlords. But I think that a company that is negotiating and working out longer lease extensions in advance of getting those rent reductions, it makes them stronger. They come out of it stronger because their basis is lower. They've solved a major problem. Yeah. And you're seeing that happen. We're living through that problem solving as we speak right now, because we've seen that problem solving taking place over the last 3 years, but not as much as we've seen in the last 2 years.
Now, Brandon, we are running pretty close to our cutoff here. I've got a couple more questions that are all along the same vein here. Maybe we can knock them all out with one. We've got Nicholas Elwood that says, I've been noticing Walgreens and select CVS properties reducing their footprint for their stores by converting old restaurant properties and retrofitting them into smaller stores. Do you think this is going to be a long-term continuing trend with these pharmacy companies?
Did you say Walgreens? I didn't.
Walgreens and select CVS properties reducing their footprint for their stores. Do you see this as a trend that continues? There's always going to be, introductions, right? They're going to test, just like every corporation is going to have a trial and error, test run on specific prototypical footprints. But I just look at, again, the basic fundamentals. What survived the last 20 years was the drive-through. So Walgreens has laid out their, Mini Cooper prototype that is going to be like more of a community store. But that being said, it's more a function of, they didn't expect the COVID crisis to take place. Nobody did. Nobody had that crystal ball. But, with that being said, what has been introduced to the market, what we've learned from this experience, I see the drugstore retailers definitely pivoting back to focusing on their existing stores that are the backbone stores for the company, that make the company the profit it needs. So with that said, and coupled with them lowering their rents on a lot of locations, but exercising those 20-year lease extensions, they wouldn't exercise for 10 or 20 years if next year or 2 years from now they were expecting a windfall of new prototypical footprint stores that weren't going to have drive-throughs. So I don't think those stores, that model is going to be a trend that's going to be aggressively pursued. Got it. And
or as aggressively pursued as it was.
Got it. And, unfortunately, we're at our hard stop time right now, and we still have a lot of questions and people that, want to get more of your information and wisdom from you. Maybe we can pick this back up at another date and do a part 2 of this episode where we can kind of dive into some, because it just seems like you've got like 10 questions here and some stuff in the chat. And unfortunately, we're out of time today, but maybe you can come back and we can dive back into this.
I have another, on my end, 5 minutes if you want to throw another question at me.
Yeah, let's keep it going.
Yeah.
So we have here as well. And then again, everybody that's attending at this moment, if you have any questions or you'd like a recording of this, or you came in late or you had to leave early, whatever the case, you can email me, Yannis@Crexi.com. It's in the chat down there. Get in touch with me and I'll make sure that you have a copy of this after it's done. And then if we end up doing a part 2 to this, I'll loop you into that as well. Question here from Justin: is there more of an appetite for fee simple drugstore locations versus ground lease right now?
I always say the sentiment, it depends a lot of times. If somebody doesn't have a basis, on their carryover on a 1031 exchange, a ground lease, it checks a lot of boxes because it's, underlying absolute triple net lease structure. Being responsible for, really just collecting a mailbox paycheck. So that being said, and the tenant constructs the building. So I like the ground lease ownership position. And if it fits for owners, it works out well. But fee simple also, fits well from the perspective of having the ability to depreciate and utilize cost segregation benefits. So with that said, the sentiment, it's pretty fair on both sides. I think it's equal. You get people calling in asking for fee simple and ground leases, but truthfully, I'd say maybe leaning a little bit more towards the fee simple because of the depreciation component.
And then we've got another question from Cody here, which I think is a great one. If quickly you can share an example of a viable pivot for a location that you've needed to get a new tenant for. So former drugstore, what have you seen go in in some of these drugstore locations?
You know, I what I've seen over the years, obviously, dollar stores are a very viable candidate. You know, the Dollar Trees of the world, the Dollar Generals. What I like to see are dialysis centers, because that medical component, or the physical therapy centers. Granted, a lot of times the drugstores are in close proximity to hospitals, or again, densely populated submarkets. So you've got dollar stores, you've got dialysis centers. Auto parts have been a selective candidate for a backfill of a drugstore. We've seen on certain occasions banks, and then we've seen on other occasions, depending on where the territories were, sometimes these drugstores were more urban demographics, where a beauty supply would be a viable backfill candidate. I saw one the other day where City Trends was a clothing operator backfilled the former Rite Aid. And so you have options, again, because of what I touched on initially, the basic fundamentals, where these drugstores are located. But you have to, again, it all has to be taken into consideration depending on how you buy these properties. And that's where you can get hurt or you can do well. But that's something that, again, needs to be discussed with the broker who's listing the property, and hope they set their clients' expectations correctly.
And Brandon, before we wrap it up here today, would you mind sharing with the audience your contact information so they can get in touch with you directly should they have more questions or want to engage you on some business?
Sure thing. Yeah, I can give you my contact information now, or how do you want to do it? Do you want me to just give my email address, or do you want me to hold up a card?
You can give us your email and or phone, whatever the best way to contact you is.
Yeah. So I can be reached at 248-702-0290. And my email address is B as in boy, Hanna, HANNA, at Encore, ENCORE, REIS as in Sam.com. So B Hanna at Encore, REIS.com.
Okay, great. I'll put that in the chat for anybody that wants to get in touch with you. Brandon, thank you for joining us and taking the time today. It's great to hear your insights, especially on such a timely and important topic. Really appreciate your time today. I know you're very busy, so thank you for taking the morning to sit down with us.
No, definitely. Thanks for having me. I very much enjoyed the call, and I agree. This is a critical topic because there's a lot of underlying really just separation from what people think they know and what they really should know when it comes to this specific space and what's ever changing on a daily basis. So thanks for coordinating this, and thank you to Crexi for to working with you guys. Definitely, you guys have a phenomenal platform. Big supporter of the platform. Very impressed. I think you guys are going to go very far.
Yeah, I appreciate that. And thanks to everyone else who joined our call today. Goodbye. Stay healthy, and be sure to tune in next week.
Thanks. All the best. See you.
Take care.
Bye-bye. You too. Bye.